What's going on, guys? We're gonna go live for a little bit here, kind of watch the market. So we're just getting back from the New York lunch hour here, so kind of just looking at a few of the tickers that I was playing and or looking at here. So just kind of do a little bit of a day's recap here. What I'm really looking at here is a few things. So I'm looking at Tesla, right, coming off the bottom. I took a nice bounce play here, actually reclaimed Tesla down here in the 204s. Now, the only reason I was looking at the 204s is you can see once we lost this opening range high here, it doesn't take a rocket scientist to see that the next area of demand is going to be sitting here at the 50 EMA. So as soon as we lost this 50 EMA and the bulls started to recover this move is when I went ahead and jumped along, and I was just going to use the low of day as a stop. Pretty simple trade there. Took it for about $1.25 higher here. Now, the bigger level that I would have liked to actually see sort of a initial washout on Tesla to catch a bottom bounce was going to be down at 202.33, which was right below this 200 into this 50-day moving average on the 1 hour time frame. This would have been a very, very good bounce from here. You can see as we're coming into the 20 SMA here. But Tesla right now, as it stands, I wouldn't chase this bounce, could get rejected, come back down. What I would kind of wait for is we need to break this 209. So as soon as we can break this 209, we need to put in a little high, we need to retrace back a little bit, and then we have room into 211.77. And anything over the 212.50 could really start to expand back up to the high side. If we look down here to the bottom right, let me just make sure you guys can see that. So if we look down to the bottom right here, you can see the triple Qs, which is the Nasdaq 100, coming off this New York lunch hour, phenomenal candle here, kind of engulfing the last 3 hours worth of price action and taking out pre-market highs. So the supply zone that we're coming into here is the 150-day simple moving average. So make sure you take profits if you did take this bounce or the reclaim of these short-term moving averages, that you're taking your profits. Okay, so take some profits here, but hold a runner and leave your break-even stop. Okay, so leave a break-even stop here on these triple Q calls or your shares or however you're doing that. With that kind of being said, look at NVIDIA here. I put in this level here in the Discord and Evolution Trader. So for all of you members in there, if you guys took this, make sure you guys are taking some profits. So I was saying that there was a sneaky little channel here over 206. And if we just kind of look at the hour candles here, 1, 2, 3 hours worth of consolidation. As soon as we really broke this channel here, we had room to run into the upper Bollinger Band, was sitting at around 237, 237.50. So make sure you guys are taking profits there. Again, move your stop loss to break even. If we do decide to break this Bollinger Band, we could start to retest these highs of 238. Again, I would like to see NVIDIA break the earnings highs here, okay, over that 238, 239, and then we're really going to get the 240 plus push. So just kind of keep that in mind. Meta has been the stock of the day as far as strength. If we look at Meta right off of the bell here, kind of took out the pre-market range here. I wasn't really expecting Meta to kind of go on this run because Meta trades a little wacky, right? So Meta trades a little wacky. What I was really looking for here was the push into 173 and then 174, and I got in on this breakout here and kind of sold into these two demand zones, or into these two supply zones. Didn't think that it was really going to come into the 176. So you can see this is the LR50 here. We kind of nicely pulled back into some rising hourly support here, the rising 5-day moving average, and now we're kind of just bear flagging to the top side. Again, potential here 176.87 if the market does want to continue to kind of push higher here, in the later half of the day. So just kind of watch that area. Again, for Tesla, we really need to see it get over 209. So we're just going to kind of look at these levels for just a little bit here and kind of see what we can do. Really looking at the Meta trade back into 176.29, and then the remount play here on Tesla over the 209. So definitely want to keep those two in order here, definitely, so we can see what's going on. But if you kind of look here to the bottom right hand screen, our candles, triple Qs, are trying to make this break higher. So that's one thing that I'm going to be watching here, if the Qs can kind of get going, right? Let me know what you guys trade. For anyone that wants to hop in here, let me know what you guys traded today. What are you guys looking at? again, the price action that we've been having the last couple of days, guys, hasn't been the best. It's still, it's still my feeling that this is, just kind of setting up the tape to kind of roll over. Anytime you have one or two stocks that are strong, but then everything else is kind of at the bottom or middle of their channels, it's never really a good thing. The market gives signs all the time, right? When a market is healthy and a market is strong, you're going to see everything green, right? So if you're a beta trader, meaning you're going to trade big tech, Tesla will be green, Meta is going to be green, Nvidia, they're all going to be running, right? And they're going to be making new highs. And when they make new highs, they're going to pull back in for 1-2 hours into rising support, and then they're going to make a new high. Right now we're kind of having one or two stocks in the whole group that kind of puts in this big massive move, and then everything else kind of just sits or either fades, right? When you have that disconnect in the market is really when that something is brewing, right? Something is brewing. Now, that's not to say that the market doesn't start to rip. The market is definitely going to either break to the top side or the long side. We've been in this kind of channel for a few days now, right? So, being that we've been in this market for in this range for a few days now, what we're really going to see is that expansion channel, right? So if you've had a hard time trying to find moves that really go more than 20, 30, 40 cents at a time before pulling back in, we're going to get it, but you just need to be able to make sure that you're watching and you're ready for the move, right? You can't have too much of a bias. If everyone wants stocks to go higher, it's no secret. The sun shines brighter and people have bigger smiles on their faces when stocks are going to the upside, but be ready if the move does come to the downside. Again, it doesn't mean that the market needs to break out to the top side. It doesn't mean that the market needs to break to the downside. The whole thing about trading is you need to be prepared and have your levels ready, right? So if you have your levels ready and you kind of know these macro areas of supply and demand, then you understand that when the Qs start to get over and really start to close over 295, 296, 297, then we're really going to start to have that expansion channel to the top side. But if the Qs start losing 293, 290 and then 285 to the downside, so those are levels that you're going to need to have on your watch list. Those are levels that you're going to need to follow. So even if you're someone who doesn't LeBron's legacy, who knows, right? Who knows? Stocks, LeBron has a great year, makes the playoffs, maybe stocks go higher, right? LeBron misses the playoffs and we're probably going back down to 200 on the Qs. What are you going to do about it, right? So if we kind of look at what's going on here with the Qs, don't be too one-sided bias, right? And that's a lot of things. A lot of new traders, and I see it all the time, people on Twitter or on StockTwits, everyone says the market's rigged, this, that, and the other, but then they're saying, hey, I can't wait for Monday to trade. If you think the market's rigged, then you shouldn't be trading the markets. You just don't have any idea what the hell you're talking about, right? And you see that kind of stupid shit all the time, and it's like, people don't understand, well, why is the market going up? Why is the market going down? Your guess is as good as mine, and that guess is as good as the next guy's, right? Nobody really knows if the market is going up or going down, and people are going to say, all of this outlandish shit, well, it has to do with the Fed, and it has to do with interest rates and the dollar and this, that, and the other. Yeah, all of those things, all of those catalysts kind of play, a good kind of bias as to where the market is going. But if you understand technical analysis and you understand all of your levels, it doesn't really matter if the stock is going up or going down. Unless you're a long-term investor where, you're going to be in these stocks for 5, 10, 15, 20 years, it really doesn't matter if stocks are going up or going down. If you're an actual trader, then all you're really worried about is what channels and what areas can I really, kind of make money. That's all that matters. It doesn't matter if the stock is going up. Now, do you want the stock to go up? Sure. Do you want the stock to go down? Sure. But as a day trader, you don't need to be a bull. You don't need to be a bear. All you need to do is be a realist, right? That's all you need to do. What's realistic? If this stock breaks down this level of demand, what's the next area where buyers potentially could step in? That's what I want to know. If this stock particular price breaks level of supply, what is the next area where the next stock price can hit, right? That's all you're looking for. You're looking for these channels. And if you're wrong, you're wrong. You know, you're going to be wrong in this business. You're not going to be right on every trade. But the thing is having a plan in order to have an escape exit in case you are wrong. So if you are wrong, you're going to limit your risk to the downside, and then you're going to be able to kind of readjust and reassess the situation. So still what I'm looking at here on the video, you can see, you know, ever since we really had this 238.88 kind of high here, you know, coming off those earnings, we ran right into this macro supply zone here, hit the LR50 channel band, and then we kind of came all the way down to the bottom here the next day. And then we've been essentially trading with inside of a range for the past 2 days. So you can see in the video, it's looking better. It's looking strong. You know, definitely if you are looking long on stocks, you want to stay with stocks that, you know, have been strong, right? You know, even with some stocks being down, Nvidia has been relatively strong. Has it been the best price action? Of course not. It goes kind of down, it goes a little up. But what you want to kind of really focus on is what's been hanging out. So if the market does decide to get going, you want to be in the names that have been strong. So, you know, realistically over 238.88 on Nvidia, you know, you can kind of sneak in right here in this previous day's channel here over yesterday's highs here. You know, definitely has room to run into 240, 242, 243. This is the long trade that you're going to want to be in, you know, and how you play this is going to depend on, you know, what your position size is and how much risk you want to put on the table. You know, you're going to want it to break this price here, you're going to want it to pull back, consolidate, or you're going to want it to have, you know, the same kind of candle pullback. And then you're going to want to see that, you know, confirmation. You want to get in on that second wave and play it into the 240 to 243. You know, same thing with Tesla here. Tesla's been strong. Tesla really needs to get over 212 to kind of have that run into 218 and 220. And there's been a ton of call buying coming in today for the 220s. But again, Tesla still has a lot of work to do as of right now. It's setting up a bear flag to in my opinion, probably come down at some point and test the 202 and 201. So, you know, Meta, on the other hand, is consolidating sideways here. As long as Meta doesn't lose 174.30s, you know, we can see Meta start to push up into 176.75. Same thing for the Qs here. Coming out of this channel here, they do have room to 296.85, but again, they're going to need to really get a base and start to build a base over 295. If the Qs can't build a base over 295, well, then you can just see here on the chart 294, and then as well as 294.30. So these would be the next two stops where the Qs would come if we can't start building a base over 295. So you kind of have to look at it. Do you want to be long technology if the Qs get rejected in this zone? Because if the Qs start to give up 293.63, it's an easy clear shot down to 290. I hope that kind of makes sense. So right now, especially in the market that we've been in for, you know, the last few days, and for some stocks over a week, you have to be patient, right? I know, understand, so many of you guys want to, you know, turn on your computers and you want to start trading everything as soon as the bell, you know, rings, right? This is not that market right now. It's not. We're going to get to that market, but right now it's not. You need to be patient. You need to understand your levels. You don't want to take trades just for the sake of taking trades, because then that's how people get, you know, shot in the kneecaps and start blowing up accounts and start revenge trading and giving back all of these profits. Lo and behold, to have 1-2 weeks later, you know, market breakout and go on a, you know, multiple week run up or a multiple week run down, and you're sitting back thinking, man, I could have made so much money if I would have just sat patient. Right now, you got to really scalp, you know, smaller moves. You have to really size down just a little bit. You know, you don't want to be, you know, trying to oversize in a market that is very, very consolidated. It's very condensed right now. You know, earlier today I was looking at Microsoft. Microsoft had $1 average true range for the whole day. You know, this is a $300 stock that we're talking about, trading only in a range of $1. So, you know, if you're an options player, where are you going to make any money if the whole day's range is only $1, right? What are you going to, you know, take options contracts and try to sell every 10, 20 cents higher? You know, you're going to deal with that stress. You're going to have those stress levels when we're congested like that, when the price is very, very congested, you need room if you're an options player. And a lot of people, you know, and this is really sad, and it is really sad, you know, but a lot of people look on social media and they see, you know, people making astronomical gains, right? These P&L screenshots that are out there, you know, making people's year salary in a day or year salary in a month trading options, right? But the thing with options is you have to have room in the trade. Okay. Now, you know, if any of you guys who have been following me for a while, you guys kind of know my strategy and my system. I got a ton of moving averages and a ton of supply and demand zones on my chart. I need to find trades on the option sides that have space. I need gaps. I can't trade, you know, in between 203.30s and 204 on Tesla just for the sake of taking a trade, right? I can't trade, you know, going short on Tesla below 202.50 into 201.50. That dollar room is going to be so small to where if we do lose that level, we're going to go down 20 cents and then it's going to bounce and then it's going to come down 30 cents and then it's going to go up 15 cents. You know, there's no room in the trade. What we need to have happen here, if I kind of just use Tesla as an example here, what we would need to have happen, you see how much room we have here over this 208.50s, 209s, right? If you look at this area here, look at all of this space here where we don't have any congestion. This is a channel that, you know, a sneaky channel. It's not a big area here, but we have, you know, between 209 and 211.74. We're talking about $2.75, almost $3 in the trade. I don't want to be in a trade, you know, that has 80 cents or a dollar. You know, if we're looking for a short, I need to get below 201.41. So if Tesla does come back down tomorrow and we do close somehow today into the close below 201.50s, then this is a short potential here to take a $2.50 trade into the 199.53. And you know, if we start to lose a 199.53, then look out, right? We've got a lot more room down on Tesla. But you know, but if you're constantly, you know, turning on your computer screen and you're just, you know, looking for these moves, like for example, you're coming over to Tesla and you're looking at this move and you're telling yourself, okay, well, we bounced on Tesla here, you know, you get long and then it pulls back $1 and you get stopped out and then you try to short it and then it bounces. You're doing all of this stuff. All you're doing is draining mental capital. You're stuck in between a range here. Okay. You're stuck coming off of the day's low bounce here, getting stuffed at supply here. We haven't cleared out these sellers here. We need to get rid of these sellers before we can actually have any type of expansion move here on Tesla, and then we need to take out this pre-market level before it can really start to run, if it's going to run into that event on Wednesday. So, you know, don't stress yourself out. Don't worry about, you know, watching everyone else and what the hell everyone else is doing. You know, focus on your stocks that you like to trade. You know, I tell everyone, especially that comes into Evolution Traders, depending on your account size, find stocks that you like the way that they move. Okay, find stocks that you can afford to take some size on. You know, plain and simple. You know, all of this nonsense and this crap that you see, you know, small account from $1,000 to $10,000 is all bullshit. You know, can it be done? Of course, but who wants to trade with $1,000? You know, and if that's all the money that you have to trade with is only $1,000, it's fine. Everyone has different kind of account sizes or whatnot, but don't expect to take 1,000 to 10,000 in 30 days. Don't expect to do that in you know, in a week. You know, the odds of that and having continued success, you know, are not in your favor. You know, you have to be able to take size. So, you know, if you have $1,000 account, you should not be trading Tesla options trading at, you know, $250, $300 a pop, right? It just doesn't make any sense. You know, in this game, you're going to lose, right? That's the whole part of this business, is taking those losses and then getting back into another trade, right? If you think that, you know, your best traders on Wall Street don't lose, you're crazy. You know, you're crazy. Everyone's going to lose, but it's not about, you know, losing. It's about how do you lose, right? That's what it is. If you're a type of person that gets long on a stock and you're sitting there watching the stock be down $2, $3, $4, $5 working against you, and you're still holding this because you want to get in, you want this stock to magically, you know, come back to your break-even spot, that's not the way to trade. You know, that's why I have all of these lines on my chart. That's why I have all of these supply and demand zones. You have to understand, you know, if Meta starts to really break out over today's highs and it gets over this channel here, it's got a lot of room higher, right? You know, if we kind of look at, you know, Nvidia, and if Nvidia gets over this 238 over these earnings highs here, breaks out of this 3-day channel, it's got a lot of room higher. right? If we kind of look at the Qs, if the Qs can start building over 295, we've got at least another $2 worth of room. That's the trade that you want to be long in. This is the trade where you want to be looking at technology stocks when we start to get over these levels. Now, when we're trading between 294.60 and 294.97, do you want to be long on a stock? What do you think your stock is going to be doing if the index that it trades inside is within a 50-cent range? It's going to go up, it's going to go down, it's going to chop you out, it's going to stress you out. Okay, that's what you need to understand. If you trade equities and you trade shares, you're on a margin account where you've got nice leverage there where you can afford to take as many day trades as you want, and you want to play for those 10, 15, 20 cent moves. Be my guest, right? Be my guest, but you better understand where your out is at if you're wrong, because you're playing smaller ranges, right? So as the market still consolidates here on this hour, we put in this new high here, 295 around 86 level. And now the market on this hour candle, right? That's the, for intraday trading, I really use the hour candle channels. They really set up very, very nicely. If all of you guys want to kind of, put those hour candles on your chart, kind of look at what I'm looking at here, you can see the bigger picture, right? And then we just want to scalp in between those moves.